Hi, this is Kerry Artak with Wicked Stocks, bringing you an individual stock update in the TLT, that is the iShares 20-year plus Treasury ETF, very popular Treasury ETF. This is really an update. We've been doing these not on a regular basis, but periodically now for over a year. I did record this particular one on Thursday, July 28, 2022. I'll be showing you weekly bar charts throughout on this important high volume interest as far as the Treasury ETFs go. This is a weekly chart that goes back to the early 2000s, the origin of the contract itself. I'm going to zoom in here and show you that, and we covered this in previous videos this year, the violation in early April of this long-term channel bottom. That is presently at 130.72. That set off a long-term sell signal. This channel structure goes back some 13 years. And in my mind, we shifted from sort of buying pullbacks in the TLT long-term. In other words, the interest rate market subdued, not prone to spikes, not prone to continued higher rates, higher inflation, to actually shifting into that dynamic in early April. And so our first target, our first big picture target has been, and we actually did essentially test it in the middle of June, this longer term descending channel bottom that this week is at 105.42, dropping 28 cents a week. In fact, I'm going to show 30 seconds of the video from early May to show our expectations for reaching that channel bottom. That sets off a long-term sell signal. The first target in terms of the big picture, a 2 to 3 month objective, and we're probably 2/3 of the way there now, 1 month in, is the 108.69 descending channel bottom, which is dropping at 28 cents a week. So this remains our objective. At the current rate of descent, we may well reach it by the end of May, perhaps the next few weeks. Or that could spill into June, but I'd say somewhere in that area. And so we did break to within 1% of that structure. 105.42, dropping 28 cents a week. That if tested over the coming, I don't see it coming weeks, but over the next couple of months, perhaps we can fall back to this important floor of support. And, it is not necessarily the ultimate target. I'm going to show that in a moment. This is sort of like a midpoint, a pivot point that can contain quarterly selling pressures, which is done really so far. We'll just call that a second quarter low in early April. And from here, we can spring back into the lower 130s where we find a more significant ceiling of resistance that can contain buying, if tested over the next few months, can contain buying through next year. If we test this, say, some point in the fourth quarter, it can contain buying through 2023. And I'll show you what the ultimate objective may be on that. But for right now, this image pretty much sums up the dynamic through the rest of the year. 105.42, if tested, able to contain quarterly selling pressures. We may not see that again until September or October, which by that point in time, we're in the fourth quarter and could contain selling through the rest of the year. And above which this market could, there's no clear indication of it, sort of claw its way back to the 130.72 formation. Now let's zoom in just a little bit and show you our downward support right now near term is a combination really. They're pretty close together for all intents and purposes. 112.08 is the low weekly settlement so far following this move that was put on that week of June 13th. And also that same week, the high of the low, 112.83. So, the 112 handle is sort of is our range of support that if tested over the next week, 2 or 3, and it may well be in reach, can absorb selling at least on a weekly basis, possibly monthly basis. And if we were to close below even 112.83, but I'm putting 112.0 out there for good measure, 112.08 out there for good measure. If we close below 112.08, then I think we're just a few weeks away, 3 to 5 at the most, from retesting that 105.42 long-term channel bottom, where once again we can place a quarterly low. Now the emphasis remains stable near term above 112.83, and we can over the next few weeks reach this extreme channel top, which is dropping at a pretty good rate of 87 cents a week. I think this is an area we could fill that wedge out between 112.08 to 112.83 floor and the 125.75 ceiling, dropping 87 cents a week. That wedge is continuing to narrow as we move into September, October. We could fill that wedge out all the way through August trade perhaps. And then the clear indication that we are likely to test that 130.72 long-term channel bottom would be a settlement above the 125.75 descending channel top. Until then, 125.75 able to contain weekly, possibly monthly buying pressures. And from there, we could fall back to 112.08 to 112.83, which can contain weekly, possibly monthly selling pressures. And if we close below 112.08, then we revisit long-term support at 105.42 within 3 to 5 weeks. And if we close above 125.75, then we retrace up to the 130.72 former long-term channel bottom over the same time horizon within about 3 to 5 weeks. Let's take a look at the downside. That is the path of least resistance right now, unless we slip into a clear-cut recession, in which case the pressure on interest rates will certainly lighten up, and that 130.72 would be likely. And then we'll just take it from there. If it looks like we're going to approach 130.72, say, I don't know, by the end of September or at any time between then, we will, what am I saying here? We will jump on this. Did I mention at the top of this? I don't think I did. If you're with me, we're putting out we're starting a weekly TLT analysis. I forgot to mention that. On Monday, August 1st. We start this next week. So this is sort of a preparation for that. On a week-by-week basis, we will be offering the iShares 20-plus year Treasury bond ETF, the TLT, on a weekly basis. We may mix it up with other, high-volume Treasury ETFs, but I just want you to know that it'll be part of a subscription package, and it'll be offered to you. So it's something to consider. Our full range of products comes in around $50 a month, and that would include the weekly TLT. So just know that if you want to continue receiving the TLT and viewing it on a week-by-week basis, you should go to wickedstocks.com and sign up. I think it's the amount of information that you get from us, the buy and sell signals, the clarity of those signals, I think is well worth the price. So let's talk the big picture here, because as I say, the path of least resistance remains downward. If we're talking long-term through next year, and that is to say below 130.72, that 105.42 formation, a mere hesitation point on the way down to, well, if we close below 105.42, we'll get there in a hurry. 105.42, once again, dropping 28 cents a week. If we were to close below that structure this week, and it would need to be by a 1% margin of 104.37 or lower, then we enter another phase of meaningful weakness. And I would then anticipate, the timing is obviously impossible, but it could be inside of 3 to 5 months perhaps, where we fall all the way back to the lows of this particular entity, this particular contract in the very low 80s, 80.51 to 80.91. You can see them far left. And really the target for me is this extreme channel bottom, a full channel extension that sort of duplicates, extends the full width of that previous channel formation that we closed below in April, presently at 130.72. The full channel extension right now is 69.77, but by September of 24, I know that's a couple of years away, but it could take that long. In the interim, we could rally back up to 130.72, top out there through next year, fall off. So yes, it could certainly, it doesn't have to be a straight descent, but I do think, and I'll continue to make the case, that so long as we're below 130.72, that we have entered a longer term phase of higher interest rates that will continue to increase likely. At least that's what this chart is telling me. I'm not an economist, so I don't want to rattle anybody's cage. I'm just saying, as far as the TLT is concerned, it is suggesting the possibility for continuing into the lower 80s over the next year or two. And if we were to close below the 105.42 formation, that should accelerate. That could be within 3 to 5 months, actually. So possibly by the end of the year, if we were to close below 105.42 anytime soon. I don't see that happening. I think that 105.42 is likely to hold, I'm going to say, through the rest of the year. We could certainly revisit it in the interim. But I think it has the capability, as I say, of containing quarterly selling pressures, and from there we could claw our way back into the low 130s. But it is the low 130s. If you're looking at the long-term 3 to 5 year time horizon, really, holding below 130.72, the lower 80s are likely, and I'll just say that. Anyway, I think that pretty much covers it for this particular TLT analysis. Once again, a reminder that next week, the week of Monday, August 1st, we begin offering the weekly TLT analysis on a weekly basis. You have a great day, and we'll talk soon.